What's up, G? So as you can see here, we have the Show USD live. We are couple dollars of a new all-time high. So let's see if we get it in this video. And for now, let me review the fundamental news. Real quick, let me show you. We had today the GDP and the unemployment claims. So we have a mixed data pretty much because have a bad one but a very good one. The unemployment keeps doing very good, something that it's positive for every USA citizen, so we're happy for them. We're happy that the economy is recovering slowly, but it's recovering. There's other indicators that tell us that it's not a 100% recovery. Of course, we all know that, but we have a new president, new people behind him, and we are just cents away from a new all-time high. Also depends in the broker. Here's Oanda, so could say 2790.545. It's a very good area for an all-time high. It's a very high price for gold. Also, it's very expensive gold at this point, but big investors move the market, not us, not our opinion. We can only react to whatever we see. So let's quick break down the fundamental news. So the USA economy in early 2025 presents a mixed picture characterized by have the GDP growth. The GDP growth rate of 2.3% in January of 2025, which was below both expectations of 2.7% and the previous quarter's performance of 3.1%, indicates a deceleration in economic activity. This slowdown could be a sign of returning to a more sustainable growth pace after potentially overstimulated periods, but it also raises flags about the vigor of economic recovery or expansion. So as mentioned, it's good. No, it's not good. But also, not every red data that we have or that we see, it's like will pump market. Like market is not reacting, as you can see. Of course, we have this big bullish. This is the 15 minutes. We have some bullish candles with good volume, but this is the USA session, so it's natural that they will tend to push their coin, or they will try to push it against. So sometimes you need to remember that buying cheap dollars, it's also good for banks or other big institutions or companies, like for example Apple. Sometimes buying cheap dollars is very good, and in this case the opposite is happening for gold. This is a very expensive price for gold, unless you are someone that is accumulating or that that pretty much accumulates gold either for luxury or for an investment in the future. So this is a price you don't want to sell either. You don't want to really be buying here or accumulating at these prices because you are in an area that it's an all-time high. In previous years before 2024, every all-time high that was printed, at least at the touch or the break and retest, was dumped like to the down, to south. It was going to South America. Like dollar was very strong every time gold broke any all-time high, and of course for gold to break all-time highs, it had to pass many times. Last was 2011, then we needed COVID, and during the COVID panorama, because it was very hard, I will always tell everyone, COVID is a very interesting situation. I'm a very fan of the 2008 crisis, well 26 that ended up in 2012, but COVID is very interesting. It's literally a lockdown. Countries couldn't do much or a lot of things compared to the 2008 that was pretty much print money and save the banks. Of course, more complex, but you know, the more or less the panorama or we set the tone as something similar. So let's go with the labor market. So despite the GDP slowdown, the labor market remains robust, as evidenced by unemployment claims dropping to 207k or 2007 against a forecast of 224k. This lower than expected number of claims suggests that employment is holding strong, potentially buoyed by sectors that continue to recover or expand, which could support consumer spending and mitigate some of the adverse effects of the slower GDP growth. So the unemployment, we've been tracking it all month, especially since 2025 started, because we had a very interesting close of the year with the reduction of the rates, with the possible measures that we already know that they took action when Trump entered its new government. So unemployment is something that we care about because we care about people. We don't care about institutions or big companies or billionaires. We care about the people that are the pillar of any economy. And since we put our money in the economies or in the countries, we have to respect the human factor in this case, and we need to track it, because if the employment sector is good, is doing good, people will, first of all, will be happy. When you're happy, you tend to do better job, or even you try to expand your current situation from one employment to maybe a self-employee, or you can get two jobs. Who knows? Like, there's a lot of things that you can do that add to the economy. So the pillar of every country and every economy is the human factor. So we track it because they're the most important thing. So for now, the labor market, we also have the NFP coming very positive, and the unemployment and employment claims. The unemployment claims have been going down, 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 and the employment sector is growing. Also, we have the jobs openings, very big number. I think it was in the 8 million. So it's very good for now, the sector. We are again pushing to the all-time high. So let's go with the inflation. The core inflation rate from December 2024 at 3.24%, down from 3.32% the previous month, and significantly lower than last year's 3.93%. This indicates that inflationary pressures might be easing. This trend could be partially attributed to the Federal Reserve monetary policy adjustments in 2024, where 3 interest rate cuts were made, the last in December. However, with the GDP growth slowing, there's uncertainty to keeping them at that rate or to lower them. Like, there's no intentions from the Fed right now to slow down the. I mean, there's intention from the Fed to slow down the rate cuts. They took months to do the first one, then they dropped 3 at the end of the 2025 cycle. So this is what market reacted to it in the previous months when we printed the all-time high that was here. This is the 15 minutes, so we have a lot of price action, but it's more or less when we, let me go to the 1 hour. If it breaks the all-time high, it breaks it. So let's see let me adjust it so it's more, even though I don't really track weeks, it's the 1 hour, so very solid to add it. So here you can see we have the first rate cut around this area. We have some reaction to the market, like we were pushing very hard with very little retracements, and then we have these 2 major retracements. This is a good retracement, but it's not a reversal or a breakout structure. We needed to print a new all-time high, that is the current active one. And then we have this major drop after the Trump news and the second rate cut in November. Then we have the double top form during November, and the third rate cut in December is the one that dropped price, but we didn't even got close to the last low. So this was a breakup structure, yes, but also we don't have the 50% of the total move that we got during 2024. Like, the bullish trend on 2024 was very heavy. Like, we're talking $500 move at least. So this is a very big pressure from the market, and we'll know why. It was in total $800 trend with I would say 500 or 800 depending on the, if you are able to unload positions in any of the minor retracements, but the total move was around $800, so a very big trend. So this is nothing compared to the total move, so we still have tons of room to break this structure. And for now we are again bullish because we broke the triple high that was preventing price to go up. Then we rated multiple areas, like first we started with this yellow, then the orange, then the red, and then we are ranging here in these 2 areas. As you can see, price action is very similar in these two stages, just the opposite. One is going down, one is going up, and naturally, because we are following the news, we know that the price is we already have a new all-time high. Let's mark it. So our new all-time high is at 2790.2029. So it's not a very big change, but it will be in a couple of minutes because price keeps pushing and will keep pushing for now. So we go to the Federal Reserve monetary policy. The decision by the Federal Reserve to maintain interest rates at 4.5% in early 2025, that was yesterday. They decided to keep it flat, reflects a cautious yet strategic approach. They're likely monitoring the effects of their 2024 rate cuts, aiming to control inflation while not really trying to mess with the economy or possible Trump's actions. And also there's issues with China, blah blah. So this pause in rate exchanges suggests they're in a wait and see mode, assessing whether inflation will continue moderate without further intervention, or if they need to keep pushing. At one point they will need to do it. Like it's very hard to sustain this weak dollar when the economy seems to be doing good. Like it's very expensive for, even if there's jobs, everything is very expensive. Like you need not jobs at this point, then you will need double the salary because groceries, going to the cine, or everything that really triggers happiness or good things for the human factor at this point is very expensive. And the sentiment is that the new government, just like the last one, they don't care. They're just there for the money. And well, Trump made the very terrible mistake of aligning with a parasite like Elon Musk. That person is disgusting. He's a pyramid scammer. Just check the Tesla stock. He said that it will be at value of the 5 biggest companies like Apple, Nvidia. So he says the market cap of Tesla will be as big as those first 5 companies together. So that guy is just a liar. He will tell you 2026 or 2027 something will happen, but never what's going on in the present. So Trump, with all his history also of bad decisions and possible scams, it's just triggering a sentiment of big opposition against them. So the future economic outlook at this point, looking forward, the economy seems to be at a crossroads. This slowing GDP might suggest a cooling from previous highs, which could be beneficial if inflation continues to decrease. However, if this slowdown depends on if inflation rebounds, it might necessitate further policy adjustments, as mentioned. A strong labor market provides some push, but continued monitoring of all these metrics will be crucial. Again, let's keep checking the unemployment sector. That's what we care. And if you know USA citizens or born or not, but legal or illegal, let's not. I'm Mexican, so I cannot say much about that, but you know, they're hard workers. They put USA in the first place just because of work. Government is smart, not this government or the past one, but USA government usually is smart because they want to be the best, and that's pushed by the economy of the human factor. Okay, so if you have a strong labor market, those workers are top one in the world. Like there's no discussion, they're one of the best, if not the best. So USA will fly in any second as soon as they recover the economy, but they need to stop being greedy. Like Trump, Musk, their cabinet, everyone is already rich. They're just parasites at this point if they don't understand that the situation is not like in 2016 on the first Trump election. People are suffering still from COVID. COVID was 5 years ago. So this is amazing that they are still trying to push their agendas instead of helping the people. Like, it's crazy. So the interplay of these factors will dictate whether the Fed might need to adjust its monetary policy further, or if the current stance will suffice to guide the economy through the transition period. In conclusion, while the USA economy shows signs of cooling in terms of GDP growth, the labor market strength offers a counterbalance. The Fed approach of maintaining current rates reflects an understanding of this complex dynamic, focusing on achieving a soft landing where inflation is controlled without derailing economic or employment growth. The coming months will be telling whether this strategy will prove effective navigating the economic landscape of 2025. So here we have a minor weak candle retracing, but for now we could assume gold is very strong against the dollar. So the Federal Reserve is trying to do its best. I salute all of them, especially Powell, after monkeys with low IQ were throwing trash to him in 2023 and 2024. Economy is recovering. It's not the Federal Reserve fault that this is happening. COVID was not fault of the Federal Reserve, and yet they're sustaining the country after the Democrats and the new administration are just trying to them over. Okay, so we are economists, we are traders, we are investors, we are not FOMO players. We don't care about what others do, because the only thing that we can do is put our money in the best place possible. And for now, the best place possible, of course, will be to be bullish, but this is a very expensive price of gold. So any sign of recovery, as you can see, we have mixed data. So that doesn't mean this is 2024, that price just will push forever to the upside. No, this can happen in any point that price will reverse to the south. Let me show you the 4-hour. So in the 4-hour, we really need to, let me show you the 800. More or less here is the 800 move total trend during 2024. So we need at least 50% of this move as retracement. That will be more or less here in the 2386 area to consider this is a rebalance of price or a break of structure. So what I mean by a rebalance is that gold price is very high. And it's very high because also they printed a lot of dollars. They're trying to take these dollars out of the economy. But at one point, price won't be as it was before COVID in the 19,000s or in the 1600s. Like before COVID, the strongest level was the 2000 for decades. That was a very strong level. Then we managed to manipulate the break here in 2022. As you can see, we ranged a lot during 2023 until we managed to break in 2024, but that was merely economic push, like economy 101. Dollar is doing bad, people or big investors will buy gold, as easy. So here, as you can see, we keep pushing to the upside. We will stay at least ranging in this new area of the all-time high. Probably we will do more, show you with my painting skills. Probably will do something similar. We will retest again. We will stay some time here. We have some data tomorrow, but I expect this total area to be, for now, the new gold price. So have a good one, G's.